Welcome to RANsquawk's morning briefing for Tuesday the 9th of March 2010. One of the major things has been a Fitch conference which has been ongoing throughout the London morning. It's been going on for about 2 hours now, and they've made various comments in regards to most of the major sovereign states from around the globe. And that has led to pretty stark risk-averse trade across the asset classes. We now have a case of weaker stock futures are trading around their lowest levels. Bond futures up around the highs, a gain of around 30 ticks. We've got a generally stronger dollar and yen and weaker in the euro and sterling. Just taking a look at some of the breaking headlines that I have in front of me now. In terms of the UK's sovereign credit profile has deteriorated according to Fitch. However, they do note that the UK is still within tolerance of AAA rating. Nevertheless, cable itself is down around 100 pips, currently trading around 149.60. Some of the weakness in cable also attributed to further in regards to the pre-election polls. The Times this morning suggesting that race to win majority seats is getting ever closer, the Tories continuing to relinquish their lead in the polls. Elsewhere as well, the front page of this morning's Wall Street Journal indicated that Moody's Investor Services has expected wind down of UK banking bailout programmes could trigger rating downgrades of some of Britain's biggest lenders. So again, cable down around 100 pips. In terms of some of the other breaking headlines from this latest Fitch conference call, they've said that among the larger AAA sovereigns, urgency is greatest for the UK, Spain and France. It has led to a bit of widening in terms of the peripheral spreads by between 5 to 7 basis points in the likes of Greece, Spain and Portugal against the 10-year German Bund. And elsewhere, for the US, Fitch has said that there's no pressure on US credit rating in the short to medium term, but the US is vulnerable to interest rate shocks. And with that, T-notes are up at the moment. That's predominantly, though, has been based more on the back of that risk-averse trade, and also comments overnight from China's FX regulator, who said that they've affirmed the country's purchases of US Treasury, saying it buys and sells the debt on a daily basis. So looking to ease some of those fears, which did stem after last month's tick status from the US, where those Chinese holdings did move to the second on the spot in terms of total holdings against that of Japan. So again, reaffirming that they do have an appetite for USTs. Looking forward then in terms of the US session, no real major data of note. However, we'll be looking out for the NFIB Small Business Optimism Index. We'll have the weekly ICSC and Redbook numbers this afternoon, alongside IBD tips at 3 o'clock London, so that's 9 in Chicago. Take a look elsewhere in terms of fixed income. Eyes will be for the 40 billion 3-year note from the US. That'll be at 6 o'clock London, so that'll be midday in Chicago.